And over to the news, folks, for things that you may have missed out this week. First up, we're heading over to crypto news. For crypto inflows hitting 1.9 billion after the Fed's first rate cut of 2025. This is 1.9 billion pouring into BTC and ETH funds, as well as spot ETFs pushing assets under management, AUM, to a year-to-date peak despite the brief shakeout. So looking at this article here, we can see this coin shares table showing the weekly flows month-to-date and year-to-date. Obviously, Bitcoin dominates. Behind that is Ethereum as well as multi-asset ones as well. Total AUM is in the right-hand column, so the multi-asset ETFs that are out there. Solana, XRP, Sui, Litecoin, Cardano, Chainlink, Kronos, and others are shown there. Bitcoin and Ethereum lead this following this Fed move. You can see the daily total net flows on this table here from So Value. Short Bitcoin products continue to weaken as well, recording 3.5 million in outflows. So the position, the mindset is changing there. They've only got AUM, assets under management, at 83 million according to the data. So you can check that out in this crypto news article. Next in the news is this article from DAP.expert. Talks about Bitcoin in September, stabilization, institutional investments, and ETF withdrawals. So we can see that Bitcoin had some consolidation, moving to a price between 110 and 115,000 throughout September 2025. There was the impact of institutional investors. They had a significant impact on the market. 751 million was withdrawn from US-listed Bitcoin ETFs. Whale addresses were accumulating at record highs, it shows. Further on that, analysts note that there was temporary volatility, but highlight a cautious market sentiment. So some interesting insights there and some other news that you can check out over at DAP.expert. One of the major news items to come out during the week, apart from having Token 2049 out there and all of the FOMO that we were getting from being back home in Sydney, was this thing from Swift on the 29th of September saying that they're adding a blockchain-based ledger to its infrastructure stack. That means that it will scale those benefits to more than 200 countries that it operates in. So Swift and a group of more than 30 financial institutions will develop a shared digital ledger. That does mean private, and it doesn't mean the open public type stuff that is out there. It'll be interesting to see how that works out, because on the one side, they are one of the major networks for payments out there, if not the major payments network out there. But on the other hand, we've seen the failures or the pullbacks from banks testing private blockchains and moving to more public, at least in some cases, some hybrid options as well, where I think it was JP Morgan that looked at something like Onyx for their platform before and had something where they basically were private at first, but then moved to a hybrid public blockchain where it had some private capabilities for them. So the benefits of developing on a public blockchain, getting all that new development and open source development that is far more than you can just do in-house, but also having the commercial confidentiality. It's that balance that we look for as well when we're doing projects like we do with Project Acacia with the RBA and Digital Finance CRC. Further on this Swift announcement, it does show some details here with a conceptual prototype on consensus, and Swift will work at a pace to complete the prototype in phase 1 and define future phases of work. We can see here the flagship Cybos conference in Frankfurt, where we saw some other blockchains like Hedera and others heading over to. That was where this thing was announced. So you can see all of that on the swift.com page. Next in the news, we're heading over to Europe, and we can see that UK banks are pressing on with tokenized deposits even after the Bank of England's stablecoin warning. So here, the Governor, Andrew Bailey, the summary is that HSBC, NatWest, Lloyds, and others are launching tokenized deposit pilots. The Bank of England has said that banks can experiment with tokenized deposits, and HSBC sees the most promise in cross-border transactions. We can see here that despite that, Bailey is skeptical of stablecoins, saying that he was not against stablecoins. He still could not understand their need and believed tokenization offered more value. Stablecoins, a type of currency pegged to fiat currency, have boomed in popularity obviously, with the Genius Act and other things out there. But Bailey has warned that stablecoins take money out of the banking system and could threaten financial stability. In an interview with the Times newspaper, he warned of banks against issuing their own stablecoins. So while the UK's Financial Conduct Authority is not expected to finalise stablecoin regulation, the BOE has said banks can experiment with tokenized deposits within existing regulation. So putting those guardrails around there, we'll see what happens when it is this type of guardrails which limit innovation, and will there be a pushback? Will it make sense to actually have multi-bank stablecoins out there? We will see. So we'll definitely keep a close eye on that one. Over to the Financial Times, and whilst that article is all about the skepticism from the BOE governor, that was on the 26th of September, this article here from the 1st of October shows a softening of stance towards digital tokens. Stablecoins, it says here, could cut reliance on bank lending, Andrew Bailey has said, in a softening stance from the digital assets that they are looking at. In an article for the Financial Times, Bailey said it would be wrong to be against stablecoins as a matter of principle, noting their potential for driving innovation in payment systems at both home and across borders. So really interesting to see the two different articles just highlighting almost different stances there. So we'll have to dig into that one a little bit more. It talks about what stablecoins are here. It goes further to a quote. Before that, it says that Bailey did not see stablecoins as a substitute for commercial bank money, but on Wednesday he wrote that the financial system does not have to be organized as it is now, with a heavy reliance on commercial banking lending to fund the economy. I do wonder about the change. It says here that it's possible, at least partially, to separate money from credit provision, with banks and stablecoins coexisting and non-banks carrying out more of the credit provision role, Bailey said, adding that it was important to consider the implications of such a change thoroughly before going ahead. So interesting to see that we've got the difference in opinions there. If I go back to this article that we see here, it didn't seem too positive. And so it's interesting to see that there was this warning about taking money out of the banking system and yet support for it here, but not support in the sense to just move everything to stablecoins, but at least some things could be moved to that. Nevertheless, he did say in this article here, cautioning against a number of features that require scrutiny, including whether the assets backing them should have to be entirely risk-free in order to make them truly stable. And I guess that's a shot across the bow, maybe, meant to or not, with regards to some other stablecoins that have had a mix of assets underneath them that are not entirely risk-free. When you think of risk-free in financial markets, you think of safe and stable assets like bonds, government bonds especially, which do not move that much in terms of the risk that is there, the highest grade of risk, the type of stuff that you know is not going to move, but you don't get as much of a return, but you do need those sorts of things within a portfolio to just ensure that you have that balance there. And definitely financial advisors, people that you need to speak to about all of this, but it is interesting, the take that is there. Anyway, we move on to the next FT article. Over to the US, and the US regulator calls for crypto passporting with the UK as she steps down. So this is Adrienne Harris, departing after 4 years as head of New York's Department of Financial Services, the DFS. She's said here that a passporting scheme was really interesting in terms of an opportunity following an agreement on a UK-US task force on markets of the future. There's another FT article on that you can read. Speaking ahead of the announcement before her departure, she said that the borderless nature of the crypto market made it more important for global regulators to cooperate and align on standards. The DFS regulates many of the world's biggest financial institutions, which includes Goldman Sachs, Deutsche Bank, Barclays, as well as some of the largest crypto asset providers, Coinbase and Circle, which we know quite well. So really interesting to see this future forward outlook, this more positive towards digital assets view that an outgoing chairman has. So more on that in this FT article. Moving over to news about Kraken. They're in talks to raise funds at $20 billion valuation, according to Bloomberg News. So the crypto exchange is in advanced talks to secure fresh funding that could value the company at about $20 billion. This would include a commitment of $200 million to $300 million from a strategic investor, the report said. Kraken declined to comment here. This would, subject to market conditions, follow the company's $500 million fundraising round at a $15 billion valuation earlier this year. So it certainly seems like it is a hot sector, and more folks are looking for ways to get access to that. And Kraken, the international exchange that's been over here in Australia and recently supported as the major sponsor for the Australian DeFi Association, is one of those that is benefiting. So more on that in this Reuters article. Next, we get a piece here from Forward Industries. This is an announcement of their $1.65 billion private placement in cash and stablecoin commitments, which is led by Galaxy, Jump, and Multicoin Capital. This is to initiate a Solana treasury. So the announcement here was a $1.65 billion in cash and stablecoin commitments for a private investment in public equity PIPE offering led by Galaxy Digital. So we can see Galaxy, Jump, and Multicoin will provide both capital and strategic support to help Forward Industries structure and execute its Solana treasury. So we see Bitcoin treasuries, we see Ethereum treasury spoken about, and now Solana, positioning it as a leading publicly traded institutional participant in the Solana ecosystem. We can see here more details about the lead investors. The board of directors of PIPE as well, Carl Samani, co-founder and managing partner, is expected to become chairman of the boards since co-founding Multicoin in 2017. We can see some quotes here. There's also Chris Ferraro, Mike Novogratz, and further advisors. So a bit of an announcement one here that you can see, but some interesting news, especially for treasuries, which have been a topical item, and now seeing Solana being one of those assets going into company treasuries. Let's see how that goes. Another article here on Red September, rocking crypto markets and Bitcoin treasuries crashing 76% as Wall Street retreats. They talk about the great unwinding, a deep dive into the institutional exodus. The core of the current market turmoil is the precipitous decline in new institutional demand for Bitcoin. Corporate digital asset treasuries aggressively accumulated Bitcoin earlier in the year, saw their acquisitions plummet from a peak of 64,000 BTC across those treasuries in July 2025 to a mere 12,600 BTC in August, with September figures holding at 15,500. This is a 76% reduction in buying activity, and it underscores a broader insto shift away from aggressive balance sheet accumulation. Let's see if it actually looks up Ethereum here, because we do know that there was an increase in Ethereum. So it's interesting that they only speak about, at least according to this, even looking at, let's say, ETH asset, no mention of that in this article. So let's see how that goes. It might be a move away from treasuries for Bitcoin, but more towards ETH and other assets, or maybe just reinvestment into other plans. Certainly does not mean, as one data point only, that there is a negative move against digital assets as part of corporate treasuries, as part of corporates, and that new wave of adoption coming through. But certainly it is an interesting data point. Welcome back, everyone. It's Mark here from the FEX Insights podcast. I'm here with a special guest who's been at AusDeFi meetups and presented research critical to the blockchain space. Anna Vennonen from CoreData. Welcome.
Thank you for having me, Mark. It's awesome to be here. So I'm from CoreData. I'm a research consultant there, and we're a market research company that focuses predominantly on the financial services. But we've been doing research in cryptocurrency for the past about 3 years, a bit longer than that, but we've had deep dives for about 3 years. So we've just done another big deep dive, and today I want to share some of those findings with you.
Fantastic. Yeah, amazing. But before you were doing the research stuff with CoreData, what was the work that you were into? Was it financial markets work? Was it all research stuff? Was it outside of that industry?
Yeah, so it was an interesting kind of journey into the finance space, because I did my master's in sociocultural anthropology.
Oh, wow. Okay.
But the sort of bridge into that was through doing my master's thesis on cryptocurrency. So in that piece of work, I was doing basically ethnographic research, which is this really long, sort of deep style of research where you do interviews and you really immerse yourself in cryptocurrency communities and basically observe their behavior over a long period of time. In this case, it was 7 months of immersion with 3 different communities. We had some online ones.
Here in Australia or?
In Finland, because I was doing my master's in Finland.
Okay, cool.
Yeah, but from that, I kind of got really interested in the space and wanted to continue doing that kind of thing. And then I ended up at CoreData, so I get to do that every day now.
You get to get paid for it, which is great, amazing. And we'll dive into that research report and show it on screen here. But I guess you presented at an AusDeFi meetup recently with some other research that you guys had, and it was really interesting. You saw everyone's eyes and heads lift to look at the graphs and charts that you had on screen there, because there's a lot of what people kind of feel, and there's the subjective, the qualitative side of things. Bringing in the quantitative, I think, is really interesting. As a former researcher myself in the equity space, I'm always fascinated by this kind of stuff. Yeah. In terms of the research insights, I had a question for you. If you could, I guess, elaborate on the recent research on cryptocurrency adoption in Australia, whether it's from this new report that you've just come out with or the stuff that you presented on a few weeks ago. It was like 27th of August, so last month. But yeah, what surprised you the most, or what can you tell us?
Well, I'll start off with the key numbers, because I think that's what everyone wants to sort of get a sense on, and that is how many people in Australia are actually holding it. Through that report, we know that 12% of the population, now that's adults, so anyone over 18, are holding it.
Is that the new report or the
new? Yeah, so the report I presented fed into the white paper. So that was a sort of taster of what was
Bring that up. Where's that chart? Here we go.
Yeah.
Right, front and center, adoption. Okay.
Yeah. But what we see is that it's actually a lot higher when you look at the sort of subset of the population who are investors. Among that population, it's 38% now. So
wow,
it's actually the 3rd most common asset. So that comes after Aussie equities and cash holdings. So that could be term deposits and that kind of thing.
wow.
Excluding people's home, because we don't count a primary residence as like a investment in that same way.
That's interesting that it's ahead of ETFs, and I've done a lot of stuff in the ETF space prior to getting into crypto, and even now I still do a lot of stuff in the ETF space. But yeah, I knew equities would be up there. But yeah, ETFs and then international shares behind that, and then real estate excluding the home. Did not realize that. I mean, I've seen reports about 30% mark or so that SwiftX have put out. But yeah, narrowing it down to just amongst investors, because this is overall Australia, but amongst investors, it's much higher.
Yeah.
That's interesting. That is quite telling that people see this as that growth asset. And what else was interesting here?
I was interested in the reasons that people are adopting crypto. So as you would expect, a lot of people go to it because they believe it's going to be valuable in the future. They see that it's an area for growth and wealth creation and that kind of thing, as well as trading, which we'd expect. We saw a huge amount of activity during the COVID-19 pandemic. This got really popular online.
Everyone's sitting at home. Yeah.
Exactly. Yeah, so those 2 were kind of expected, but also, 4 in 10 actually were attracted to it because they want to experiment with the technology. And something else that's interesting is that 1 in 5 are actually drawn to it because of the philosophy behind it and the different values, and they sense a kind of alignment to that. And though it's a smaller portion of the population, it just does tell us that we got to remember that cryptocurrency originated as an alternative currency movement, and it's probably the only one that's been able to have this global reach because of the internet. All the predecessors got shut down. So those sort of, these values about decentralization that weren't really in common language before cryptocurrency are now something that kind of everyday consumers who are engaging with this space are starting to think about. And that changes how they view more traditional investing and that kind of thing, because they have this different perspective now to sort of ask questions about.
Fantastic. And I think, that cultural kind of change and that mindset shift is definitely important. How does it compare to previous years, that 12% that you're seeing there, and like when you narrow down like amongst investors, the 30+%, but like that's where we're at now based on your current research, but has it been growing?
Yeah, it has grown. So the last time we measured this was in November 2023, and that was 11%.
Okay.
And at that time, the Reserve Bank of Australia did a study as well, and they came out with the same number.
Okay.
So, I mean, it's grown modestly, about 10% since that time. So thinking of this through, I mean, we may be seeing it start to sort of plateau among that group of people that are the sort of first movers, the early adopters, the DIY kind of people. And then I think the next wave of investors will be those that kind of need more traditional onboarding. They need user-friendly applications, and the trust is a huge part of this conversation. So that's where sort of regulatory change and infrastructure really comes in.
And we see a bit of that regulatory change coming up soon because they've got the exposure draft as of the day of recording, 3rd of October. Exposure draft bill is out for consultation, and if that goes through, then they'll read it through the different houses and actually put it into law. So that's going to be interesting because, regulation is certainly on that protection side of things. Going back to demographics of investors, because you guys do this like, you look at it from different angles, and I guess sitting in those communities, you see this information. But your data showed that it's predominantly male, concentrated among individuals in their 30s. What strategies do you think could be effective in encouraging more diverse demographics that would help to, say, participate in like cryptocurrency investment?
Yeah, that's a really interesting one. Like, so 77% of the holders at the moment in Australia are men. And I mean, that's actually a little bit more women than I expected. We got a quarter of them being women.
Yeah.
And why I was a little bit surprised about that is that you don't see as many women at the in-person events. So they're sort of engaging a little bit differently in the scene. We know that they're buying Bitcoin predominantly. And then we also see the men are sort of going toward these altcoins and sort of diversifying more, getting deeper into the space, you could say, a little bit different approach to risk.
More YOLO type approach.
Yeah. Yep. Which, that aligns with their investing behavior more broadly. So it is to be expected. But in terms of, making the space more welcoming to women, I think there is change. We've seen initiatives or organizations like Calicu that are really trying to platform women in the space. And, even just in the time that I've been here, since I was doing my research back in 2021, 2022, there were far fewer women turning up to these events, and now I'm seeing more and more. So I think that is a good sign for inclusion.
Absolutely, and having female speakers at events and having more events where it is less about that, I don't know, let's call it crypto bro culture, and more about the investment, the benefits, the technology itself. I think that's where we start to see it break down. Unfortunately, we did see, like, I've seen some viral tweets go out there. I mean, even last year at Token 2049, so it's happening like right now. There was still that old school, let's call it shitty behavior that we saw early on, but we want, like, society changes. Seeing a little bit of that still is a bit unfortunate, but going back to it, the let's talk about age. Like this is seen as a bit of a gateway asset. And as a younger person, when I was younger, I wish I invested more because I would have obviously seen stuff grow. But you mentioned in your findings that this is like a gateway asset for younger investors. Can you explain what this means?
Yes.
And how it might impact traditional investment behaviors, say, in the coming years?
Yeah. So we know that the most common holder group of this, when we look at age, is 30-year-olds. And there's a few reasons for that. Firstly, these people are a bit more adventurous. They're starting to care about financial literacy and get sort of into investing and those kinds of things. They also have the discretionary income to start spending before they're sort of as tied down with things like mortgages and so on. But this group also is much more comfortable with technology,
right?
And comfortable with the idea of digital forms of value. So that's really kind of behind the age gap there. But in terms of it becoming a gateway asset, that was something that was really interesting to me. So we found that for a fifth of the people holding cryptocurrency, it was actually their first foray into investing.
Wow.
And now they're diversifying into other asset classes. And I think that's really interesting because the people that enter through cryptocurrency are going to have different expectations when they engage with investing, because at least for a long time, cryptocurrency has been a bit of a wild west. It's very volatile. You have to do a lot more sort of work and due diligence to stay safe in the space. And sometimes you learn hard lessons. So those people are going to have a different sort of expectation when they go into traditional finance spaces. They want to be able to access their assets 24/7. They also want to be able to transact sometimes in a private way or in a decentralized way. And that's sort of coming back to that conversation about how cryptocurrency has brought new sort of ideals, you could say, or considerations among consumers.
I think that's really interesting that it almost like lifts the game up in terms of the expectations, because let's say traditional investments don't have some of these things, the instantaneous transfer, 24/7 kind of marketplaces. And we're seeing some of these traditional, say, exchanges, whether it's the New York Stock Exchange, NASDAQ, the London Stock Exchange, looking at tokenized stocks that would trade 24/7. So there's some interesting changes that are happening to traditional finance because of crypto. But I'm surprised that, seeing it as a gateway asset, that's their first, but they'll go into other investments. So it's funny because you could see it as like people wouldn't you wouldn't have some of these investors in some of the traditional ones had it not been for crypto, which is quite ironic because, given how crypto's been brandished and, people haven't liked it from the traditional space for that very reason. But speaking of engagement levels next, what do you think are like some of the reasons for, say, high engagement levels amongst cryptocurrency investors compared to traditional investors?
Yeah, I think anyone that's sort of been around this space for more than a few weeks gets the sense that it's fast moving, it's complicated, and because of that, it has a bit of a high barrier to entry in terms of, for one, your tolerance to risk, but also your comfort with technology. And all these things sort of mean that the first people to get into it are those that are more on the sort of DIY side of things. And the interesting thing about that too is that, on one hand, the space attracts those people, but it also produces those people because there's really strong ideals in the space around DYOR, doing your own research, and don't trust, verify, things like that. And this sort of broader theme of self-responsibility, and that feeds into things like hard ownership. So, not trading off convenience for control over your assets and things like that. So there's all these ideals swirling around in the space that basically are appealing to those people that are sort of deeply engaged. But I think the next layer of things people will need more support,
Yeah, as more of the mainstream, because these are like the early, and maybe not super early because that was like years ago, but it's like more of the early adopters, not the the original kind of founders and stuff. But you're right, like I think mainstream will need more protections, more hand holding. But it is interesting that what you just described there, it's all under that wrapper of like, you feel like you're in control.
Yeah.
So I think that's interesting. The next one that I think is an important part of any kind of like investment industry is the role that financial advisors play. When it comes to traditional investing, we see a lot of financial advisors in that space, but only a third of cryptocurrency users are currently working with financial advisors from the findings that you had. What do you think needs to change in the financial advisory space to, say, better accommodate the needs of cryptocurrency investors?
Quite a bit to unpack on this one. I mean, I'll just start off with 1/3. I mean, that's actually quite high. So it's not too far off what we'd see in a more traditional investor. And by traditional, I just mean not focused on cryptocurrency or a general investor, if we did a survey, are you an investor kind of thing. So yeah, there is quite high engagement with advisors, but what we see is there's this real gap in advice where cryptocurrency users or investors with crypto, they might be working with an advisor, but they're rarely able to get advice on their crypto. So just 11% of advisors have crypto on their approved product list. So that means that they're very limited in actually having those conversations with clients, and especially providing advice on them actually having holdings or sort of supporting them in that way. And the advice conversation, I said there's a lot to unpack because there's multiple layers to this. So you have a shortage of advisors in general for the Australian population. So we have a bit over 15,000 financial advisors.
Okay.
And that's not enough for everyone.
Yeah.
It also makes advice a luxury good, so it's harder to get access to it. But on the sort of level under that, it's those APLs. It's not on there, and people can't get that support.
Yeah, these are the approved kind of products lists that advisors can actually provide as like, these are the types of investments they can push to people. What's it going to take to get some of these things like, onto those APLs? Like, because if it's on there, then it helps. And we know that we'll talk about regulation next, but have you seen discussions, has it been mentioned in the research, of people given their insights into what they think it would take to get, this changed?
Well, we know that there's strong demand among people who have crypto. 9 in 10 have had a conversation with the advisor, but they're the ones bringing it up in most cases. And the advisors, we spoke to a couple of them 2 years ago, and they've got these barriers to actually talking about it because they struggle to get professional indemnity insurance. Which protects both them and the client. So that's a big barrier. We need to have that if we're going to be able to support people in this space. Of course, having it on the approved product lists. So that's going to require clearer regulation, also more research houses having looked into different crypto assets.
Rating them and stuff.
Yeah, because they need that track record.
Yep.
Yeah.
Oh, that's interesting. And it's interesting as well because these are the things that are necessary from a traditional standpoint for any investment to be, to go through that space. And that is the great unlock that if it can be solved for, will certainly bring in a lot more people. And another great unlock, I think, and as you mentioned there, is the regulation impact. And we've seen that the exposure draft bill for digital asset providers and custody holders, custody providers as well, is being spoken about now. The papers have been out. We can consult on the questions and stuff. But how do you believe that the potential regulatory changes in Australia could affect cryptocurrency market and, say, adoption rates?
I think the regulation is really key to unlocking that next stage of people that may be interested in investing, but they're cautious. They may not have as much time to do all the DIY style investing, and they may just want to allocate like 1% or something, but they want support in that to do it. So by getting, AFSLs and that kind of thing, it's really legitimizing this space, and hopefully, ideally it would be separating the good players from the not so good, so that consumers can have a more direct way to find somebody who they can trust more in this space.
I think that's certainly going to help there, and it'll be interesting to see what all the consultations come back with, because we know from the exchange, like in previous ones where there have been these things for proposed like bills, and initially when this one was proposed by the current government, there was a consultation taking into account that feedback, creating what is now this exposure draft. I haven't seen enough of it myself yet to see how much it's taken into account, but it's going to be interesting to see what the next round of industry feedback is from different parts of industry. The exchanges have their view. The startups and builders and devs in the space have their view. Investors will have their view, as well as the associations and community groups. So it's only going to be fascinating. But with all of that, I think we'll keep an eye on things, and hopefully we see change for the good. Looking to the future predictions here, getting the crystal ball out. I'm not going to hold you to it, but like based on your research, how do you foresee the landscape of crypto evolving over the next few years, especially in terms of, say, investment behavior?
Mm-mm. Well, I think we're already starting to see it a lot, and that's the entanglement with traditional finance. So we've seen banks doing projects in this space. We've seen a super fund, late 2024 AMP, they invested a very modest amount into Bitcoin. So they've taken the first move there. We're also seeing more interest in the SMSF space.
Oh, very good. Yeah.
Yeah. So
Was that part of the research that you guys see?
we did ask a few questions on SMSFs, also views on super. So to gauge whether there is an appetite there among crypto investors, and about 2/3 were supportive of it, which is interesting because, you know, retirement is traditionally your lowest, where you have the lowest tolerance to risk.
Yeah.
So yeah, that's interesting that there is demand there. And, you know, people want to be able to invest in a way that is safe, and they need guidance to do that. But yeah, in terms of sort of what we're seeing, I would say deeper entanglement with traditional finance and also wealth management. You know, we've seen some firms arise that are focused on wealth management for crypto now. And yeah, it's an interesting space to watch.
I think it's it's definitely interesting. We know some of those wealth management firms, whether it's the likes of the Caleb and Browns, which I think got bought up by SwiftX, if I think that's right, Magnet Capital, MHD Digital, Apollo, and a few others just around Australia. A lot of those I know focus more on overseas because there's more of an opportunity there to get, you know, investors into the fund from overseas, because we don't have all these things in here just yet. But there are certainly folks here in Australia that are focusing on that, and I think that is brilliant. We need to see more of that. Do you have, I guess, next, and last few questions, and we'll get to just highlighting a few things in the report, but like, do you have advice for new investors? Like, what kind of advice would you give to, and obviously not financial advice, DYOR, you know, make sure you speak to a financial professional for this, but just general advice, what would you give to individuals looking to enter the market based on the data that you've gathered?
It's funny you mention that because, you know, you typically in this case, you'd say, go speak to a financial advisor, but, you know, it is really hard for them to get that advice right now. But, you know, in saying that, I think it's really important that everyone understands the risks, that they do their due diligence, that they kind of understand what sort of loss there sort of can accept in this space, and really go into it slowly if you're going to do it, if you think it's right for you. But yeah, get as much advice as you possibly can, I would say.
Wow. Yeah, and I think that, you know, getting into the communities, and just given that there's no, you know, not that there isn't regulation, like it's arguable, and we've seen ASIC go down on and target and take folks to court that they think were going against, because they see it as like, well, there's financial regulation and these things are just financial products. And obviously we've got the regulation kind of talk going on now, but in terms of traditional space, you've got all these guardrails, protections, people you can talk to.
Yeah.
There's a lot, it's ironic that there's a 24/7 market, there's a lot of data, there's a lot of information out there, yet it can feel so lost. So hopefully we see things rounded up in a way that means that we can get proper regulation for the other part, the 70, whatever it was percent, you know, the non-investors just yet, to be able to look at this as a more safer kind of like way to, you know, get into a space that offers them that exposure to a riskier product, but one that can offer a great upside from, you know, the historical returns that we've seen. Not financial advice, of course, but we want to do things in a protected way. And I think if the industry, as in the global commercial, the future of finance is going to change to be using blockchain technology more, we're going to be invariably investing in it and being exposed to it. But let's go back to the report. What are some of the other interesting insights that you've got here? Because this just came out last night.
Yes, came out yesterday.
Well done.
Thank you. Been a while coming. So actually, you just sort of sparked a thought for me about the financial advice space as well. Another key part of that, creating access to advice on crypto, and we know there's strong demand for that, is actually having a strong base of advisors who understand crypto assets. And right now, there is a bit of a sort of split in the market. So we are seeing that 21% of advisors are actually investing right now in cryptocurrency in their personal time.
Interesting. Okay.
Yeah, so that is pretty interesting because at the same time, we've got this big challenge in people getting advice.
Yeah.
But also there's a lot of advisors who wouldn't touch it for a bar of soap,
Okay.
And so there is a bit of a split between people who want to sort of upskill in that space or don't, and that will mean that their clients, if they want support on crypto, will have to go somewhere else to get it.
Yeah, absolutely. I can see here the male versus female kind of divide, the age distribution. As you said, the 30-year-olds are the ones that hold the most. This is interesting. The ownership by personal income. So a higher percentage. And look, I don't think this is just, obviously people have more income, they've got more disposable income so that they can invest. But even at lower levels, people are actually getting into it.
Yeah.
But then it dips off after the 250,000. So there's this growth from 75 to 100 up to 250K in like annual income. But once you're beyond that, what are they doing? Not buying crypto, buying boats, buying land, buying...
I would love to speak to them to understand that more. But really, I think that cohort, so that's often the high net worth individuals, they're very deeply engaged with financial advice. And I think part of that comes from what we were talking about before, that there sort of isn't a strong connect there.
Yeah.
So, more in that DIY space, there may be some, of course, in high net worth, there are DIY people doing it too.
It's more likely that they're going to have financial advisors who then can't advise because the regs, the APLs, it's just not there yet.
Yeah.
That's an absolutely amazing potential opportunity. And just going back to super, as you mentioned there, people don't realize that we've got the fourth largest, it was third, now we're the fourth largest pool of pension fund, or what we call superannuation pool of money in the world, behind the US, Japan, Canada, I believe. And we're projected to go back to number 2 because this year they've got us mandated to put 12.5% aside as employers and employees, right? So that is a massive amount, and there's so many people with SMSFs.
Yes.
So I think that's super interesting. The split between investors, that is, so this is actually specifically focused on investors that hold or don't hold crypto.
Yeah.
So that's a good chart there. What else have we got here? This one's interesting. Benefits of crypto versus traditional assets. This would have had some interesting, was there like comments that you guys saw as part of this as well, or?
A lot of it, I mean, we didn't ask open-enders on every single question because we don't want people to sit there for an hour doing a survey.
Yeah.
But generally it comes down to the growth. There's a small subset that care more about those like things like privacy or borderless transactions, remittances, that's a big area as well. Australia is a very multicultural society. So yeah, I mean, a lot of it comes from that sort of growth and also access. That was actually something that came out with a gender split. So women found it to be more of a benefit because it allowed for fractional investment.
Yep.
So it sort of eases that barrier to entry a bit more for them, which was interesting. So that's part of it, yeah.
Interesting. Let's get to a few more charts here. And definitely, folks, you'll see the report in the show notes. So you can check out and access that. In terms of the crypto assets held, this is interesting. It's Bitcoin's far more versus altcoins, meme coins. Stable coins is at a quarter. And then NFTs, there's still folks out there holding those, and then other. But yeah, and then in terms of most recent purchases, Bitcoin, obviously, as it hit its all-time highs, it's a bit off that as of today. But yeah, Bitcoin and Ethereum definitely dominating, it seems there.
Yep.
That is fantastic. Yeah, it would have been interesting. Oh, Trump coin at 4%.
Yeah.
Wow. So it's a recent survey.
Yeah, fairly. I mean, this was April, so it was a bit more topical. The Trump coin had come out then, around then, so, but Yeah, I mean, there is a little bit of a different gender engagement, as I sort of said earlier. Women are predominantly going towards Bitcoin, as you can see here.
Yeah, very good.
Yeah, and then men are sort of more diversified across crypto assets.
Yeah, I think, I mean, just knowing the dominance of Bitcoin and all these like metrics and charts and stuff that you see from, I'm going to forget some of the names, but I used to follow one very specifically, which tracked a lot of like Bitcoin analytics and old wallets and where things are changing, because that's the type of thing that you can get with this kind of like market. You actually get to dive deep into the wallets and see holders and the age of those holders. Like you see the wallet, obviously that's all on chain, but you don't see who the person is. But yeah, just knowing that Bitcoin has proven long term to be like the much better kind of bet is that females are smarter in terms of investing. I've seen other research out there that points to that kind of stuff. So that's interesting. And then the breakup by age. And then in the overall investment strategy, so the allocation here, that is interesting too. So some people it's 50 to 100%, nearly a quarter.
Yeah.
Wow.
So there's those people that are all in on crypto, but the majority of investors are broad investors. So they're diversified across different asset classes, like they might have stocks or bonds or something like that. We see a little bit more engagement with gold among crypto investors compared to your traditional ones.
Wow, they want the real gold and then the digital gold as well.
Yeah, there's a bit of crossover between the gold bugs. But what we see is allocation varies very widely with crypto. So there's those people that, as I said, like all in, or they've sort of started their investment journey recently, the young people who make up a large portion of these holders. Many of them have started their journey with crypto, so they're more deeply kind of allocated to it, whereas you might see some of the more traditional or older or risk-averse investors come in with much smaller allocations.
Oh, fantastic. Well, look, I think all of that is interesting, and definitely please, folks, check out the report, follow CoreData for the research that they've got there. Are there any plans for, say, further research or studies that you're currently working on, or what areas do you think are ripe for further exploration in the crypto blockchain space?
Yeah, I love this question. So at CoreData, we're always keeping a pulse on crypto through our regular sort of in-house pieces. But I do very much hope we're going to do another study like this next year and see what's moved, because it's a quick moving space and everyone's kind of interested in what's going on. So some of the things I would like to look into more would be that advice gap, what advisors think about crypto, what those barriers are, what the research houses think about it, that kind of thing. Because you know that's quite a pivotal area in this whole space, like something that is going to need to change if people are moving into it. They need that support and they need professional guidance. So, you know, advisor education is going to be interesting to look at there as well. But also something like a sort of side project of mine or a side interest is that cultural element of it. So how the different consumer ideals are coming through from crypto. For instance, let's take the example of meme coins. Now, that's an interesting one because on one hand, it's about the growth potential of these very volatile, very dubious tokens. But there's a huge cultural element there as well. You know, it's signaling membership to a community of people. It's meme culture. So I think that's quite interesting to look into as well for investment behavior. You know, it's not just this kind of like rational thing that's going on. There's something else there too.
Yeah, it's interesting that connectivity that people have in those cultures that they just don't maybe feel that they get elsewhere, and hence why there is fervent passion for that space. I wonder if it's like, I know a lot of people, and you see it in the surveys, that they're interested in the investment side of things, but it's got to be more than that. Like there's plenty of things that you could invest in. So it's interesting to see that culture thing there, and you know, diving into the gaps, that's certainly going to be interesting. If people want to reach out and learn more about CoreData, connect with you and ask questions, etc., how best do they do that? What socials are you on?
Yeah, the main place to go would be LinkedIn. So you can follow CoreData on LinkedIn. You can reach out to me on LinkedIn, Anna.Vennonen at coredata.com.au is my email. But also add me on LinkedIn if you want to talk. I'm really keen to hear engagement on this piece and get everyone's sense, because everyone has such interesting perspectives in this community.
Agreed.
Yeah.
Yeah, I think there's going to be a lot more of that. We'll see what like other meetups when, you were at the last meetup that we ran a few days ago for the Oz DeFi Association. So even if you're not on stage, you're there in the community, in the crowd, getting to know folks. I think it's great what you guys are doing. And thank you so much for coming onto the show.
Thank you for having me.
Cheers.